Yeah, let's take a look at the markets. We've had a nice move up in the general markets. We've had the DXY, the US dollar, going sideways with a slight bias to the upside. Commodities bouncing, gold and silver bouncing, interest rates going up, most important asset still. Yeah, let's take a look. Start with the S&P. Look at this. I did not expect it to reach 444. It did. It has. It's closed. Okay, just below, but when I said 444, I meant really the high over here, and it's basically done that. That looks very strong with a nice gap. That looks very strong. Let's not lie. You zoom out, it's just looks like it wants to go up. It didn't even, I mean, it retraced perfectly back to test prior resistance, which acted as support. That was sort of textbook. This move back up is indicating serious strength. And honestly, I don't agree with it, except the only reason I can imagine that the market keeps going up is simply because inflation is that high that we're just acting like, I mean, like Europe, because Europe has already done it. It made new highs despite the bear market. But I'm talking about Argentina, Zimbabwe, Weimar, where everything goes up just because inflation truly is that bad. But in absolute terms, you're still sort of losing out to real inflation. So, but stocks are actually a good hedge to inflation. So maybe that's what this is. Certainly not good, certainly not an indication of a good economy as I see it, because I think the economy is fundamentally horrible. But anyway, we're not too interested in the economy today. It's more the technicals of the market. So S&P looks very strong. Honestly, it looks like it just wants to go to 450. Nice round number. It's the last area. It's like a pit stop until, let's say, the next more significant level of 460. Now it's pretty simple. It's 10 unit increments. But for me, S&P looks very good. Obviously, anything can happen. We can just have bad news or just a horrible open, or this is just a double top when we go back down. But it'll start to look bearish if we very simply close below the recent low. So let's say 431. And if we do go there, by the time it gets there, it'll probably be touching and flushing this ascending. So it'll actually look pretty bad if we go below 430. Honestly, if we're below 430, it'll look like it wants to go all the way to below 420, actually, if you see what I mean. That's the S&P. Otherwise, next stop 460. Sorry, 450. Unbelievable though. Now the Nasdaq is not as strong as the S&P, which is interesting because the Nasdaq was leading the way up, but it's done its role. It's like booster rockets, now it just, well, it's not going to fall off, but the S&P will take it from here. That's what it looks like. But Nasdaq's still strong, almost closed above the recent high of 372. You can see that, but we are above 370, if that means anything. But I think the real bullish signal would have been a close above 372.5. But still looks okay. So maybe the S&P can drag it higher, and then we're going for absolute highs of 400, maybe a pit stop at 390. Unbelievable. Otherwise, looking for a close below 358 to go lower. We'll see if we get there. At the moment, it's just non-stop up. So the Nasdaq looks okay. It looks good. It's just the S&P looks better. The Dow Jones, I mean, that's been slow to the party, but look at this pattern here, just slowly edging higher. And honestly, if we start to close above 34,700 in particular, up we go to 35,500, beyond 35,000. So that's a slow moving ship, but that seems like it's ready to. I think it also needs the S&P and the Nasdaq to continue, but it's not as obvious this one. Otherwise, I move back down again, a close below the recent low of, in this case, 33,600 should mean that we go back down to the ascending support, and then it becomes pretty weak because it'll probably take out that ascending support. So Dow Jones, I still think will lead on the downside and is just lagging a little bit. It's a slow moving on this one. Now the Russell 2000, with the strength you've got elsewhere, you'd expect this to really be ready to squeeze. It's quite far from that. I think the banking sector is a bit of a drag. So this one, yeah, 192 is small resistance. I think really it's the last high. It's the 195, 200. It needs to test 200, close above it. But with the S&P and the Nasdaq pretty close to sort of testing all-time highs, which I can't believe I'm saying. But again, it's the inflation of the the other countries in the other time periods like Argentina, Weimar, and also Europe today. If S&P and Nasdaq make that move, then you can expect the Russell to catch up. I just can't see it. Russell, like the Dow Jones, been lagging, and the Russell actually still looks weak. All things considered. I mean, the banking stocks. Let's go to the banks real quickly. Yeah, okay. If the markets move up, you can imagine the XLF reaching up here, touch the descending. I think that'll act as strong resistance, actually. Yeah, it'll act as resistance on the way up and on the way down. Really, there's no point in talking about the move down until, a bit like the other markets here, we need probably 3-4 days of weakness just to test the downside. So I don't think we need to talk about that yet. But otherwise, the ascending and then all the horizontal lines drawn in. But for me right now, it's just looking at targets on the way up, and I see descending. And by the time we get there, it'll probably be about 35. KBE, very weak actually compared to everything else, which has been very strong. Let's see if we touch 38. If we close above it, probably, yeah, maybe just a little below this level here, 44. So maybe start to hit 42.50, 44, between 42.50 and 44. I reckon probably 42.50. Now that I see it, the absolute low from over here coincides with this low here. As you can see, we closed at low of day. It was right on it. Will it survive? No, we just flushed and went down. So 42.50. And to be honest, if you really want to make that sell, 41.89, just in case 42 is the actual level. Don't put 42, but that's how I trade anyway. 41.89, you're happy enough. And if it goes over, sell the rest. But yeah, that's what I see as resistance for the KBE. KRE will be the same thing, just different numbers. Wow, you can see this is even weaker. So first test on the way up would be 44, 45 really, but let's say 44, 50, 44 to 45. A little extra Tim at 46, but otherwise, wow, I think it'll take quite a lot to get up there. But you can see, remember this day, we just saw it on the KBE here, it closed at low of day. Look how much weaker the KRE is. Because previously in the KRE, this was coinciding with this level here. So you can see how much weaker it is. So actually, if we do start to move up, maybe this level here, which is quite interesting actually. Maybe this level here will be the resistance. Otherwise, if it really does copy the other one, it will be the low from May, let's say, so around here. So even if we get there, if we even get there, because that's asking a tremendous amount. This would probably require the test of all-time highs, probably be the Nasdaq of 400 just to see the KRE rally up here. Really, I do not see that happening. And this all looks good, and I've been saying it a long time, like markets can't go higher. They have. Again, I did notice Europe was ridiculously high. It's been up here for a while. You can see this is several weeks here. So and look here, look at this period here, the DAX, the German market, the German economy is seriously not doing well. But look, we made new highs from this bear market low. It's unbelievable, really. But the only excuse for that, and even the mainstream media know that Germany is weak. The only excuse for that is inflation. So stocks go higher to reflect inflation. So that's my only explanation, and that's the only justification for the US markets reaching new highs or old highs. Okay, with all of that said, let's check out interest rates. Now that has been going up as expected, all the way from down here back to new highs every day almost. 1 year is just going to go sideways up because rates are going to go up. What did Powell even admit? He said he wasn't ready to cut rates for 2 years, something like that. That's a serious admission. Didn't expect that. That alarmed me, but I didn't see too many people commenting on that. That was a bit strange because that's pretty groundbreaking as a statement. So, if they're not going to go down, they're probably going to go up, and they're going to go up for a while. And I don't think this pause is going to hold for a while. I think he's going to raise rates. Why not raise rates? The market's going up. The stock market's going up. So that's your green light to continue raising rates to stop inflation, to basically put a lid on inflation, and it's, higher rates are good for the economy long term. So, we've had zero, basically negative interest rates for decades. So yeah, that's what you want. The market's going up, good. More rate increases. So I expect it to keep going up. It's either going to be flat or up. Fed will either pause, or which they've done just for now, or increase another 25 basis points. So 1 year goes up, 2 year goes up. Look at that ascent. Incredible. Of course, we're going to go to 5.10, and then go back down a little bit and then breach higher. 5 years, same trajectory, back to old highs. See if this descending plays a role. 10 year, and we're about to break out of the descending. That will send us up to 4%. They all feed off each other. 30 year, that'll get to 4%. That'll get to 4%. That's pretty impressive stuff. And the 10 year also 4% is pretty important stuff. So when that's a 4%, I expect the 2 year to be making new highs. So yeah, US rates going up, not every day, but overall going up. Staircase. EU rates, look at that picture. Perfect, beautiful. Of course, we're just going to squeeze up because inflation in Europe is horrible, horrible. Same thing in Britain, just going up. It's not hard, for this to turn around, you need a massive, either a market scare where everyone just buys bonds in fear, otherwise just QE being unleashed, and the lowering of rates, which could probably happen also with the market going down, actually, if they just completely reverse decisions. So either way, you need a market crash, I reckon, for rates to reverse. And the market's not crashing, they're looking strong. So this goes up until this pops the bubble. It's such a vicious circle. So, it's not going to end well. Okay, so that's rates. Let's check out the dollar, which is a little less obvious in its trajectory because we went all the way up here. There's the resistance. It fails just before touching. Goes back down to 102, which is what I thought it would do. Now we're sort of testing, and it's going to get to 104. It's going to get to 104. It'll go up with rates. And then the market has a way of, timing technicals with news. It's really impressive sometimes. I think when we get to 104, something will happen. I don't know whether it's a bank crash or maybe the stocks go down. This sounds obvious, but either we squeeze up, because by the time we get there, also this descending will come into play. There's lots of things sort of happening around here, and this looks like a big area. Let's imagine I'm talking about this area here. It is a big area, but you zoom out, you can see why it's going to squeeze us all the way up here, or we're going to fail and then start to squeeze all the way back down and reverse this entire pop. To be honest, the bias is to the squeeze on the upside. So let's see what happens. Maybe 104, we retrace a little bit and then retest and then break out. And then we have to see where the squeeze point is. It's probably going to be a close above this area here. I'm going to say 104.5 or 105. By then, it's kind of too late, because once you close above, and I'm going to delete this line, but especially this area here, the high put in during the last test, once you're above this area, closing here, that means you have to go here. And by then you look very, very strong, and you've already closed above the descending, blah, 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 you're going to squeeze. So for me, it's all about this line, which I haven't even drawn yet. And I won't, because I have too many lines, and I'll remember to draw that, that's the last high. But I think that the dollar goes up to 104, 104.5, and then gets a bit of, because it's serious resistance, comes back down again. And then what happens? If we never even get to 104.5, then we flush. It's all about a close below 102, and then we flush. It's just going to be a lower high, lower low flush. So you don't have to trade. You're in the middle of the range here, perfectly in the middle. Place your bets. You have a long-term strategy and trade accordingly, but you should be able to account for both scenarios. That's what I think is going to happen. I think we're going to go visit 104, 104.5, maybe drop a little bit, and then let's see what happens. I think bias to the upside. So watch out commodities. But again, it really can go wrong with the markets, with interest rates. Maybe there's a banking crash that happens any moment. Maybe there's some geopolitical event, right? Russia's basically going to win the war. So I don't know if that's going to have an impact, or maybe there's a new event. Either way, the dollar is going to be extremely important, and a decision comes soon, you can tell. Okay, let's check commodities. Copper bounced. Yeah, I mean, this was the recent lowish area. Then we just flushed it and bounced back up. It's kind of holding this ascending. Can I just adapt it a little bit? Yeah, that's still okay. There's a little fake flush of the ascending, bounce on the horizontal, back up. Resistance was perfect, just below 4, you can see. And then back down. This is now relevant. And now we're back into the ascending line. So let's see, it's really stuck between the ascending and this 3.9, let's say 65 zone. See what happens. If we go back down, then we're going to look for a close below 3.5. Well, let's just say 3.5, but basically 3.55. So that's copper. It's doing okay. It's just grinding sideways, if I can say that, sideways up, but weak because holding the ascending is one of the weakest patterns. To be honest, it lost the ascending not long ago. So copper just sideways rating overall. Natural gas, strong, strong, strong. You know, this is what I'm talking about with the dollar when it closed above its recent high. It's just more biased to the upside. Just reminds me of that a little bit. Natural gas, I think, is just going to go all the way up to 3 and then squeeze. End of story. I'm not going to cover the move down because I think it's just too strong looking for that. Next stop is 2.92. It doesn't matter. It's going to go straight to 3, maybe close just below it, but the next day above it and squeeze. Looks very strong. If it is going to go down, then it's going to have to close below 2.59 this area, and then maybe we visit back down the lows down here, but then it'll rally back up again. I think it looks very strong. I'm not going to cover every scenario. I think we go up to 3 and squeeze, and then we start to play these little horizontal lines just before the gap. Then we close the gap, and if there's for some reason a crazy amount of strength, then we go all the way up here. And to be honest, by the time we do that, we may have to add the final pièce de résistance. Oh, wow. I didn't draw that one. That could come in handy too. Could even be resistance before we hit the horizontals. So that's natural gas. Let's look at oil. Yeah, stuck in this little triangle here. Do we close above it? We're almost there. And then we start to rally. And to be honest, before we get to the high 70s or 80s, it needs to clear this zone. I'm going to say this. You know what I mean? 74, close above 74, then we can start to move around 80. 74 and 80 on the way up. But for now, just to close above 71 point, this little candle here, close above this candle, you beat the last one, but also you'll be on this ascending. And to be honest, you probably will rally to 74. So I reckon a close above 71.65 would be great. I think it'll do it. It just keeps holding these lows. It just keeps this very, very strong in the sort of 67 zone, low 67s, very, very strong. So good place to start a position if it flushes, which it's looked like it's going to do for a long time, but what doesn't go down will go up. Honestly, buy your 67 and just get ready for a drop. Otherwise, be prepared for a move up to the 80s, to be honest. Looks very good. Very close to just squeezing to 80. I can see that. Okay, uranium. That's already done its little squeeze outside of this descending, come back down again. And now we need to see how it reacts with the market. The market's already made a huge move. And if the market drops, uranium tends to drop a little bit. But to be honest, it should go up. It should go up. A bit like oil, it just looked like it was going to flush and it never did. And then it squeezed and now it's, retested the descending. So bias to the upside. Bias the upside. Next stop 22.5, then the high 23.3-ish, and then basically this one here 24, just above 24. So yeah, no, I'm not going to draw any trend lines. I think it's pretty obvious. So yeah, uranium bias the upside. Let's look at gold and silver. Well, that's done quite well, hasn't it? Just closing above the descending. Very nice. Nice bounce here just after flushing 1900. That's what I thought it would do, get to 1900 and flush it. I thought it might go a little lower, but look, missing it by 10, not even $5 is nothing. And now here we are. We've totally bounced, and now we're closing above the descending. Next stop, we want to close above 1940. to really be sure that we reclaim this horizontal level. Then we can test the 1970 and the 1980, because this entire zone here has been resistance and support. And I'm going to draw it in. I know it's annoying to have lots of lines, but this is the truth, actually. 1970 has been resistance and it has been support over here. So for me, we need to go a little, we've actually closed pretty much above the descending. So 1940, then let's reclaim this area for now. Again, the dollar, interest rates in the markets will have an impact. So let's see what happens there. But otherwise, downside, yeah, the old low 1900 should be support. If we flush that, then down here. Silver, stronger outperforming. Next is 24. You can see why 24 is resistance, and then above that 24.5. But let's clear 24. Let's close above 24 first. Otherwise, you can see it's hitting its head on prior, not even prior actually. You can just see that's a level, it's hit that a few times. We need to close above 23. Let's try there. Otherwise, on the way down, 22. And if we go lower, the ascending. Very simple. So here, 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 and then we'll see about that. But if we do lose, not only do we have this horizontal, but more importantly, this ascending long-term being there. So silver, look for that flush. And if it does, very strong buy. It could be the last strong buy on the ascending before it moves up. Because let's be honest, if the market's going up for inflation, gold and silver should be too. So, and gold and silver stocks, which is a combination of the markets and the metal. This, I mean, look at this strong bounce. GDX, look at that. We flushed the ascending, went down. And that's why you shouldn't be too strict about your buys and get ready to drag and drop them in and chase the market if you think it's bounced. And I honestly, this day here, halfway through the day, I knew it was going to be a strong move. And look at this candle, 3 candles, very strong, outperforming the metal. It's very nice. And it looks even better, the actual support zone on the GDXJ. Look at that. I had this line in ages ago. So we flushed we didn't flush, but we closed. Look at this day here where we just dropped below the ascending. We held, let me zoom in here. Look at this. We opened at the ascending, just closed below it by quite some distance. But then look, it was just trying to hold this level here. And we just went low with, gold was flushing 1900. There were other indicators to follow. Gold, silver, the dollar, interest rates. So it went lower. And then look at this. It touches this. Perfect. I had another level just in case, in case gold flushed to 1880, 1860, but we never got there. Strong engulfing, continuation. Now we're going to try and reclaim the ascending, a bit like copper. But otherwise, we have our levels. We've got gold here. We've got the resistance levels. So let's see if we can reclaim the ascending, and keep your eye on both GDX, GDXJ, gold, silver, the dollar, interest rates, and the market. Sorry, but you have to look at all those charts. It's just an advantage, to be honest, because sometimes there's one or two that are leading the metal, and it just gives you an edge. So, but otherwise, very strong bounce in the miners, very nice. Let's see how they react when the market goes down. Honestly, overall, the last couple of months, they've reacted very well to the market going down. So the fact that the market's going up and that we've been going up also the last couple of days is okay. It just means overall the sector is very, very cheap and undervalued. I just feel like the market has stolen a bit of gold's shine. But overall, by and large, if you zoom out, if you take a several month view, I think, the thesis for gold, silver, and the stocks, gold, silver stocks, is fantastic. And whether the markets go up or down overall, and whatever happens to the dollar, I think it's a very good investment long term. It's just about, the way you trade it. Do you hold a core position and trade around it like I do? Do you have a lot of cash on the sidelines, earning interest maybe, right? Money market fund. Do you trade other stocks too? So to not get bored, but also as a hedge, because I've got some alternative stocks that have done very, very well, whilst gold's gone sideways, even a bit down the last couple of months. And, just have a strategy, have a trading strategy, which means you're not hanging on the edge of your seat all the time, and you're kind of happy almost no matter what happens. If the market goes down, if the miners go lower, you're happy because you've got money on the side and more income coming. and you've got a long-term strategy, so you're happy if the market goes down, and also have enough in there so if it goes up, you can feel the difference. Anyway, that's a small philosophical endpoint. I feel like I should talk about Bitcoin because look at this beautiful move, and I should, because it looks very good. Look at this, sideways down, it hits this support zone. Why is it support? Well, look, that was the low from back then. It was the high from this rally. It was the high on that rally. It squeezed higher and acted as support just here. And then as we came back down, bam, we also have this ascending that I drew a long time ago. It came very close, right? It's not always going to touch it. Everyone always greedy, waiting on the exact dollar, 24,000, or maybe it's 24,300. Well, no, it was 24,800. You should watch that on the 1 minute chart, candle over candle, drop it in case you're going to miss it by $300-$400, which is nothing in Bitcoin's world. Don't be greedy on the downside, just like on the upside. So there it was. That was support. Screams up. You've got your little BlackRock or Vanguard, or whatever ETF, Fidelity, the whole gang. And then look at this. Look at this huge engulfing candle, close way above the descending. The next horizontal way above that. Obviously, we're going to go test the highs. We did. And now we're just sort of cup and handle hovering here. Looks like we just want to go to 32,500. Why do I say that? Well, look, just like why this horizontal line is here. It was the low from there and the high. Well, it's the low from there and it's the high. So next stop, it's not that far up. And it could even go higher. If we go higher, 38,000, 40,000. Wow. So yeah, those are my thoughts on Bitcoin. Sorry I haven't done videos lately, just holidays work. I really do intend to do it more frequently. But anyway, hope that was of value.